For today's business report, the markets started off looking volatile in February as they responded to a lower crude oil price and massive moves in the U.S. dollar and global currencies. Africa 54's business reporter Jill Malandrino has more from New York.
February trade is mimicking January due to weakness in crude oil and the massive swings in currency. Oil has plummeted from $112 in July 2014 to the low of $27 in January 2016. So why has crude been unable to find a floor in the price? It's due to the very basic economic principle of supply and demand. There's simply too much supply in the global marketplace, storage for the product is running out, and OPEC and non-OPEC producers are in a stalemate regarding production cuts. Until we see significant supply come out of the system, the crude complex will remain under pressure, and oil-dependent nations across the globe will have a difficult time maintaining and instituting a realistic budget. In fact, Nigeria and Angola are in talks with the World Bank and International Monetary Fund to help secure funding support, as government budgets have largely been funded by oil revenue. We constantly hear, as goes crude, so does the S&P 500. I would beg to differ at this point because it's evidenced by the divergence in crude oil prices and the S&P 500 following the 2014 crude peak. As we can see, the S&P 500 enjoyed a stunning rally while crude plummeted. So while crude in the near term has been the catalyst for S&P 500 volatility, it also coincides with the first Federal Reserve rate hike in December and other global bank policy action, which lends to the ongoing currency crisis. Let's again isolate Nigeria to see why devaluation is such a concern. For countries like Nigeria, which import a lot of their food and refined fuel, this has created serious challenges, and importers buy in dollars and sell in the naira, meaning they get less for their money or they have to charge consumers more. This is the case for many developing nations around the world that saw a boost in their economies during the oil boom. It was a phenomenon that they had to adjust to quickly, and it is much easier to adjust during the boom than it is during the bust. For the Voice of America in New York, I'm Jill Malandrino.